Hey traders, Raghee here, and in this free video we're going to return back to these main averages because I think there's a big conversation that's happening here that can oftentimes occur when market participants look at an up day like today and don't step back to look at where we are within the context of an up day. You always want to look at anything, whether that be price, whether that be data, on what's known as a rate of change basis. And what that means is not whether or not we were up 400 points today, which is completely arbitrary, but where were we 400 points up or down or whatever it may be, right? In comparison to yesterday. Are we making progress off of yesterday's highs or lows? Is this a continuation, right? So think of that kind of like a rate of change. So what we've done finally since Friday is rally now up to the upper ends of these ranges. Now, these are nothing new. If you've been following these, this commentary here with me, you know that we've been talking about moving from an overbought to an oversold, and then now oversold, which is the bottom of the range, to overbought. I mean, this has been the way in which we've been moving for some time, and this is not new, right? In fact, this will be now 1, 2, 3, if you want to consider that 2 peaks, 4, 5 times potentially. This is a distribution market trend, and whether or not you use something like a slow stochastics, whether you use something like the V-score here that I use, the closer we get to 1 or 2 peaks, right? Either we get up to about a plus 1.5 standard deviation or a plus 2, between a plus 1.5 and a plus 2 standard deviation. It's going to put us in the realm of the resistance from these previous Darvis levels here. So this is the NQ. The only market that's not exhibiting this choppy, we're at the overbought resistance zones, is the Russell, which I believe between where we are now, the entirety of the wave, all the way up to the 200 exponential, which is represented by that white dot, or that series of white dots, this is a little bit more in line with a trend follow. And you can see what I've highlighted here by way of the resistance levels that we want to keep an eye on, right? In the V-score. When has price wandered too far from sort of its normal operating temperature? Now we know from a support level standpoint, when we get down to a -1 standard deviation on the V-score, that's about as low as this market's willing to go, as evidenced by these previous lows. But when we get up to about the mean, all the way up to, and you can see in this area here, that this resistance is about 0.80, you'll see 0.84. So almost a +1, right? So between 0, the mean, and a 0.80, break the habit of looking at the standard deviation as whole numbers, 1, 2, 3, or -1, 2, 3. There's a lot of nuance between those, whole round numbers. And this is where we are right now on the Russell. So all this news that we're getting, all this optimism, both today and yesterday, were on pretty low volume. Now, I say low volume comparative to what we typically see. There's relatively low volume. Remember, this is a slightly holiday-affected week. So as the market sort of deals with different Fed market chatter, as it deals with this whole U.S.-China aftermath of, do we actually have a deal that we're going to see inked, or is this yet another, look, we had 13 different rounds of meetings over the course of 18 months to get to a deal that's not committed to paper. I'm not being a skeptic. I'm just being a realist based on past actions and history. Does anyone think that between now and December, and that APEC meeting where the president has alluded to possibly signing the deal, does anybody believe after 18 months and 13 rounds that suddenly this is going to get committed to paper, in this case, in about, 2 months? Yeah, call me skeptical, right? And we're already hearing talk of phase 2 when phase 1 is not even inked and signed. So all that really leads me to focus on the fact that if I were a hermit in a cave, what do I know? I may not know anything about the U.S.-China chatter or whatever might be going with LeBron James or anything that the most recent Fed member speech might have, illuminated the market to, but I do know that we're at another overbought zone, and getting higher and higher within it gives us an opportunity to start building a position. Now, we'll talk about the levels and how we're going to position that in the premium video, but please keep in mind, gang, some of the markets that would be sort of the canary in a coal mine if we really did have a very, very healthy market would be things like copper in an uptrend, which it is most definitely not, and crude oil in an uptrend. In fact, we are looking to and are short, for example, crude and copper, these markets heading lower, these markets running into resistance is in fact more telling of this global economic slowdown than even the IMF downgrading global growth this morning, which again, the market seems perfectly willing to ignore. That's where we are right now, gang, and I'll see you in the next update.